Markets surged to new heights as investors await crucial inflation data. But here's the twist no one's talking about. The Nasdaq Composite soared to an all-time high on Monday, while the S&P 500 climbed steadily, setting the stage for a pivotal week of economic data. Traders are on edge, watching for inflation reports that could reshape the Federal Reserve's rate cut timeline. But here's where it gets controversial. Could this relentless rally hide a ticking time bomb? Let's break it down. The Nasdaq jumped 0.7%, fueled by a surge in tech stocks like Broadcom, AVGO, which gained 3%, and AI titan Nvidia, NVDA, which clawed back from recent losses with a 2% rise. Meta, META, Amazon, MZN, and Microsoft, MSFT, also joined the upward trend. Ross Mayfield of Baird Private Wealth Management called the momentum broad-based, noting that even average tech stocks are thriving, not just the so-called Magnificent Seven. But here's the catch. Investors are now holding their breath for two inflation reports this week. The Producer Price Index, PPI, will drop on Wednesday, followed by the Consumer Price Index, CPI, on Thursday. These numbers could either confirm or shatter hopes that the Fed will cut interest rates by 0.5% later this month. Recent weak jobs data has already stoked speculation that the Fed might ease up, but Mayfield warned of a potential downside drift as markets hit record highs during a traditionally weak seasonal period. We're in a waiting game, he said. Until CPI gives us clarity, markets might wobble. And this is the part most people miss. Phillip Capital downgraded Alphabet, Google, Monday, citing concerns over data sharing requirements from a recent antitrust ruling. While the court spared Chrome and Android from being split up, the firm warned that sharing search algorithms with competitors could pose risks in the long term. Yet, Alphabet stock remains up 24% year-to-date, leaving investors to debate. Is this a temporary hiccup or a sign of deeper structural issues? Meanwhile, Morgan Stanley's Michael Wilson offered a more optimistic take. He argued that short-term volatility, driven by weak September-October seasonality and funding market pressures, could actually set up a strong finish by year-end. Equities need a significant monetary policy shift to offset growth risks, he wrote. But critics might counter. Is this just a bullish spin to justify holding on to struggling positions? But drama isn't limited to US markets. In Japan, stocks surged after Prime Minister Shigeru Ishiba announced his resignation, with the Nikkei 225 hitting a record 1.45% gain. Investors are betting that political uncertainty might ease, though the real test will be how the new government handles economic reforms. Of course, no market update is complete without the Trump-Fed tariff saga. Treasury Secretary Scott Bessent warned that if the Supreme Court rules against Trump's tariffs, the U.S. could face a $10 billion refund nightmare. We have to do it if the court says so, he admitted. But here's the question. Should investors even care? Or is this just noise compared to the bigger picture of rate cuts and inflation? As for tech, the battle for AI dominance is heating up. Citi downgraded Nvidia's price target to $210, citing growing competition from rivals like Broadcom, which recently landed a $10 billion order for custom AI chips. Yet, Nvidia's shares remain up 24% this year. Is this a sign of a market overcorrecting, or is the AI boom still in its early innings? Finally, EchoStar, SATS, made headlines by agreeing to sell $17 billion in spectrum licenses to SpaceX. The deal, which includes cash and stock, could resolve FCC investigations into the company's compliance with satellite service rules. But here's a twist. Could this set a dangerous precedent for other telecom firms? So, what's next? Will inflation data force the Fed's hand? Or will markets stumble into a left-field trade war shock? And should investors bet big on AI, or is a correction coming? Share your thoughts in the comments, because in markets, the only thing more unpredictable than the data is the crowd's reaction to it.